Hello and welcome. A lot to discuss today. First of all, I would like to start with my challenge results and how it's going from the 1K to 100K into the trading. So, this is active trading account. Now it's sitting at 1600 currently. So, basically, we are doing quite well, and last week was just brilliant, despite the fact that actually the market was quite stagnant, going sideways a lot, hectic, and even going down more than up actually. So, and therefore, we can easily see it also here in the daily chart. Let's wait until that actually opens, and let's check also other performances of all our trades. Our swing trades are basically now all in nice profit. And then there we see already 380% into the profit in some trades, that much as well. So basically, also Ethereum trade is basically almost plus 150 USD, and that is doing absolutely great. But those are the swing trades, and mainly the thing about the swing trades is that probably they will still occur minuses. They will can still go into the red zone, and that's also favorable for us because the brilliance of our strategy right now is that it doesn't matter actually the market goes up or down. We are quite prepared for the both scenarios. If it goes down, we just increase our positions and buy the limit orders on the way down. And if it goes up, we just make money. So, with that being said, that's how it's going currently with this active trading account. Remember, we were down to 500. Now we are already at 1.6 thousand. And also remember the first week or first 2 weeks was quite hectic, and that's basically was hectic from our side. We were testing strategies and testing the right approach, actually how to play this bull run right on the right manner. And right now actually it's so that basically there are about 10 coins we are building up for the large swing trades, for the long swing trades, and they will stay there for a couple of months. They will also increase some volatility from time to time, but that's definitely not a risk in any terms. And if the market is going down, we are always hedging over also our portfolio. We are shorting the market, and then currently also, even when the market actually have run quite well in last hours, maybe last 24 hours, then basically we are still also shorting the Bitcoin with the small portions, and in the moment it actually retraces from those highs. Basically, we take profit, and that's how we are doing also how we are minimizing risks for overall portfolio. And if it go down to like if the Bitcoin go down to 58 60k region or even to 50, in that sense basically we are not going to close our swing long trades. We are just increase we will just increase their positions basically, and at the same time we will short largely the market in the Bitcoin. So in that sense we basically on that time, if that is the next scenario, that means that actually for some time there might not be seen large profits, but we will just accumulate better prices. And then in the moment actually the market reacts, it reacts very fast, and then probably in day or two we can actually double our portfolio. So that's for the scenario if we are going down. If we are going up, we are just making money basically on all of our trades. We are also trading inner day trades actively on the daily basis, and those are like two coins basically are traded with the new design strategy, which is bringing quite good results last weeks, and we will continue just with trading with that. And the brilliance also is that you can copy automatically all we doing with this account into the Bybit, and that's quite simple. And the links are down in description. In description, first of all, you have to have Bybit account. I really suggest you to open account with my link below, because then you also receive bonuses up to 30k for the margin, free margin basically without any commissions, and also you have commission discounts, and that is absolutely critical also in the long term to have smaller commissions. So I really suggest use that link, and also to sign up, and also then sign up for the copy trading and enjoy doing nothing while we are actually here analyzing markets on a daily basis and trading for you and making profits. And I encourage you actually to copy trade maybe with some 10% of your portfolio, because that's the key always in the markets is diversification, and start small also in copy trading, and then see actually first results after months or two, and then increase your amount. So that's the proper way to doing it. That's about the links and copy trading. Also, about copy trading, it's very important to mention that there are quite many, of course, copy traders out there, but most of them will blow your account one day or another. So it's quite important to choose the proper risk management. And for the most of them, there are only bots up actually under those accounts, and they are typically built so that they are like slowly increasing, probably for months, probably for two, but then in one day they lose everything. They lose absolutely everything. So don't fall for those uh, copy trading accounts. So choose the proper one where actually there is also people under them, and also manages the risks and follows the actually situation in the economy and the market, and therefore also adapts the narrative in the trading. So basically, for us, we are now quite confident actually what to do if the market goes down and what to do if the market goes up. We are basically always prepared for the both directions. So let's go on actually with the current market situation. I would like to share with you, first of all, the liquidation heat map. And here we can go from the like wide picture. I would like to share with you, first of all, for large scale picture actually. So here we see this top with the market all-time high, current all-time high, and now we are around there. So how to read this map actually? As we see right now, there is a lot more, basically the more yellow, the more volume is standing there and can be liquidated. On the upwards direction, that's definitely shorts which can be liquidated, and the downwards direction, that's longs which can be liquidated. So, and for the short liquidation, that means buying, and for the long liquidation, that means selling. And therefore, there is buy pressure can be increased on those yellow zones on the upward direction, and the sales pressure can be increased on the yellow zones on the downward direction. And those areas are also used by large hedge funds and investment funds to actually on those areas used to put large orders, because there is this large orders against to be filled, because if you want to sell something in a big volumes, there have to be also buyer against you in the big volumes. So therefore institutional investors used to actually use these zones to actually buy in or sell the assets. It doesn't mean that it will go like up or down in certain way, but it means that there will be huge volume for sure, and also that means where there is volume, there is movement. And typically those zones are used to turn market around, but that's not probably in this case. If we, as we see this picture, basically on the downwards direction, there is not that much of the volume standing to be liquidated. That means there is not that much extra pressure available for the market to go down. But actually, for the upwards direction, we can see that if the price reaches, for example, first of all, 68 400, then there is 730 millions to be liquidated in the shorts, and that will mean buying, and that will mean that there is a large volume into the buying, which have to be met with the sell volume against, and that means that basically price goes up until the sell volume is met, and then we see even more liquidations, then we see even more liquidation, then it rolls like a cascade liquidations, and then basically market can shoot up quite quickly, and then we can actually, if we liquidate all of those orders or short orders, then basically here is like the empty zone which we can run just through extremely fast, and then basically also get to the new all-time high, which is 74. And if we liquidate again 780 millions of the shorts there, then we just basically run to new all-time highs pretty quickly. And that's the scenario if nobody wants to actually dump with even larger money on those zones, because also it's possible from those zones to dump the market with the large volumes, and those zones typically, as I said, are used by the big players, by the whales. So that's also the scenario can occur. Therefore, it's never like 100% one or another direction, but that's how the heat map is right now and have to be monitored closely. If we go down to the smaller time frame, then we also can monitor it closer and see what can happen in probably next 10, 12, 40, 24 hours. Then we see, for example, here that there is pretty significant yellow line at 68.4k, and also a pretty significant yellow line at 61,900. This is actually the zone we are currently trading in, and when we will reach one or another, then actually this larger impulse can occur, and then it's quite important to monitor which direction actually we have this power to go. So, and also in the very small time frame, we can see what can happen in next couple of hours. As we see here, basically if we run up to 68.2, then basically there is these liquidations can occur for the shorts, and here we also here we'll see some levels for the longs. We are currently trading in between. So therefore, it's important to watch if you are trading also on the daily basis, but that's definitely not the only thing to take into account when you are trading. Next thing I want to share with you also is this liquidation, not funding rate basically, and funding rates have been high for a while when we were actually booming and booming to new all-time highs. That was funding rates were crazy. It's almost like, as we see, sometimes even 150% on annual basis, maybe even 200% on Pepe here. That's completely crazy. But even with the meme coins, we are right now down to actually green levels, which is pretty good to see. So that is actually good for the market to actually pump again. And if we go to, for example, this order book and standing limit orders, then we see still that there are a lot of limit orders standing at 56k region. Therefore, this scenario still cannot be neglected, and can occur also if those ETF outflows continue. Then definitely, if the ETF outflows basically continue this week, or maybe next week, then we can also reach this 56k region. And that's basically about current situation with the market. And also with the economic calendar, I want to share with you what is actually important in this week happenings. There is no major events this week in the markets, but there are some things to monitor. For example, consumer confidence on the Tuesday, which is also like the first indication where actually the CPI and the inflation might go in the next reading. So, and there also the crude oil inventories, but that's more about the oil basically, and that's probably it for this week into the macroeconomics. And okay, GDP quarter results. That's also important to monitor. But actually, we are going with the economy. Is it decreasing or is it increasing, or we are like steady in the good levels? So, with that being said, that's why I wanted to share with you right now. See you next time.